Good morning, everyone. It is indeed a pleasure to welcome you all on today's webinar on Code of Ethics, Common Non-Compliance by Small and Medium Practitioner. I would like to invite CA Dr. Navendra Garg, Chairman Ghaziabad branch of ICAI for taking proceed further. Thank you, sir.
Good morning, Rashmi ji. First of all, I welcome CA Dr. Anuj Goyal ji, Chairman ESB, CA Mangesh P. Kinare ji, VC ESB, CA Kamal Garg ji, Speaker of the Day. A very warm welcome to all of you. Today's webinar on the topic that is not permanent but imperative in the realm of professional conduct, common non-compliance issues faced by small and medium practitioners. There are many programs available on the topic of awareness about compliances. Although there has been a demand of a program on ethical non-compliance by members, especially by SMEs. The objective of today's program on common non-compliance by SMEs is to address the widespread issues and real challenges faced by practitioners working in proprietary firms or small firms. By identifying and explaining common non-compliance trends, the aim of the program is to provide practitioners with the necessary knowledge of and resource to reduce and eliminate the risk effectively. A targeted session of training by our learned guest speaker CA Kamal Garg, a pool of knowledge can be utilized which can help us in implementation of best practices. The program seeks to enhance awareness about compliances, promote a culture of regulatory obedience, and finally promote the sustainability and the success of SME practitioner in an ethically compliant environment. In our profession, ethics is the cornerstone of trust integrity. Today, we will address common challenges faced by small and medium practitioners in upholding ethical standards. Let's approach today's discussion with an open mind and shared commitment of ethical integrity. Thank you for joining us. I first welcome CA Kamal Garg, today's speaker. About Mr. Garg, he is a fellow member of ICAI, a first-class commerce graduate from Deen Dayal Upadhyay College, University of Delhi. He qualified post-qualification courses in DISA conducted by ICAI, an insolvency professional registered with IBBI. He is also qualified certificate course of BRSR conducted by ICAI and social auditor examination conducted by NISM. He is an author of various dozen of books and has contributed massively for Gist of Accounting Standard and Auditing Assurance Standard for Volume 2 of Company Law published by BLH. He has been a member of various committees of ICAI in past and a regular guest speaker of IFRS and management development programs at various forums, including ICAI and ICSI. He possesses rich industry experience in the area of corporate laws, audit, and management consultancy. Now, about Mr. Mangesh P. Kinare. He is Vice Chairman of Ethical Institutional Board and he is Chairman of Professional Development Committee. He is also a member of various committees of ICAI and Disciplinary Committee of ICAI. He has a vast experience of industry. He is a member of bench of Disciplinary Committee of ICAI in 2016 to 19. He was Chairman of Committee of Management Accounting in 1619, member of Examination Committee in 1619, Vice Chairman of Board of Studies in 1619. Now, he has also written many articles in newspaper and appeared on television channels as an expert on union budget and GST. Socially, also, he is very active on various forums. He is also a good speaker on ICAI and various subjects. Now, hand over mic to Ms. Rashmi.
I would like to invite C. Mangesh Kindre, sir, Vice Chairman, Ethical Standard Board, for his session address.
Yeah. Thank you, Rashmi. Good morning to all. respected Chairman of Ethical Standard Board, my council colleague, senior council colleague, experienced person, Anuj Goyal, Chairman of Ghaziabad branch, CA Navendu Garg, our speaker for this session, CA Kamal Garg, Secretariat of the Ethical Standard Board, Ashish and Rashmi sitting in the office, and my dear colleagues. First of all, I welcome you all for this first webinar of Ethical Standard Board in the council year 24-25. I really compliment the passion with which the Chairman of Ethical Standard Board, C. Anuj Goyalji, is working and immediately announcing this program in the interest of small and medium practitioners and normal issues which we faced, ethical issues, so to say. Definitely, this program is not for the people who really don't want to follow the code of ethics. It is for the people who want to follow the code of ethics. But at the same time, due to some small issues or some small misunderstandings, or perhaps lack of understanding of the provisions of code, people are, at times not complying with it. It is always not an intentional thing. I know that. Sitting on the disciplinary bench for last around 7 years, I have observed that it's many times the small and medium practitioners just basically with their understanding of the code, they are not able to perhaps document it properly. Many times it is not, I'm saying that by intention unethical or intention against the code of ethics, but it is just a simple way of doing the things which perhaps at times the small and medium practitioner believe in client many times, right? There's a lot of what you can say faith in the client, that my client is I have to serve him. And in good faith only, many times some mistakes are committed. As I said, these are not intentional. Now, code of ethics is an Indian code of ethics, or the code of ethics for chartered accountants is different from the code of ethics which is there for the international accountants in many ways. Our institute is under the Act of Parliament. Internationally, many institutes are not under their act. It is we are the associations which have been formed. So code of ethics for them is a principle-based code of ethics. Whereas for Institute of Chartered Accountants of India, we are under Act of Parliament. At the same time, we are also member of IFAC, International Federation of Accountants. So the principle-based code which is applicable to the member bodies of IFAC is applicable to us also. At the same time, the code which is laid down by our Act, Indian Chartered Accountants Act, Chartered Accountants Act 1949, is also applicable to us. So typically, we are having principle-based code as well as rule-based code, and both we have to follow. So at times we may feel that there is nothing mentioned in the Act, but by principles we have to follow it. Or at times we may feel that some principles are giving us some freedom, but our Act is such a watertight Act where you cannot just go on the basis of interpretations. So in that sense, our code is much more stricter. At the same time, let me tell you, many times people feel that this code is a negative in nature. I feel it is not. There are so many things which has been given by the institute, right, as a background material. There are so many appendices are there. There are so many guidelines which are there. They are in positive in nature, which will help the small and medium chartered accountants, in fact, to implement this code in right earnest. What happens is perhaps we have a little bit ignorance about these institute publications, institute guidelines. And I think this session will definitely help us in brushing up all these things and knowing the positive side of code, how we can positively implement the code in India. And at the end of this session, I'm pretty sure that everyone will be convinced that it is not a negative code. It is in fact so many things which are mentioned in a positive manner in our different guidelines and directives of the ICAI, which will enable us to comply with this code. And I'm pretty sure all of us will be enlightened with the faculty which we are having today, Kamalji. So thank you very much for joining. Thanks and compliments to Anuj ji for taking the lead in having this program organized in the very beginning of the council year. Over to you, office. Thank you very much.
Thank you, sir, for your kind words of wisdom. Now, I would like to invite CA Manish Agrawal, sir, the past chairman of Ghaziabad branch of ICAI, to introduce Chairman ESB. Sir, you are on mute, I guess. Sir, your voice is not audible to us, sir.
फोन करिए यहीं से कर लीजिए आप पढ़ दो सर आप बोलो कि it appears that he is unmuted.
It appears there are some technical issues with CA Manish Agrawal, sir. I'm just giving a brief introduction about CA Dr. Anuj Goel, sir, the Chairman, Ethical Standard Board. He's a practicing chartered accountant and Central Council member of ICAI. He is one of the youngest Central Council member from the Central region. He has also served as a chairman of the Ghaziabad chapter of the Institute of Company Secretaries of the India and the Institute of Cost Accountants of India. He has made significant contributions in his tenure of 17 years in the Central Council, 3 years in regional councils, and 6 years in the branch. He is currently the chairman of Ethical Standard Board and chairman of Professional Skills Enrichment Committee and Publication and CDS Directorate. He's a goal-oriented man having vast experience of over 30 years and reservoir of knowledge that is supported by various professional degree, including CA, CS, CMA, ICW, LLB, MCOM, PhD, DSA, DIRM. He's a self-motivated, enthusiastic, and hardworking person who has proved to be a great source of motivation, especially for the youth. Thank you so much, sir. Now I would like to invite the Chairman, Ethical Standard Board, CA Dr. Anuj Goel, sir, for his opening remarks and the special address. Thank you, sir.
Thank you, CA Rasmi Jasoria ji, who is very actively contributing in the Ethical Standard Board. Very good morning, our honorable members from each and every part of the country and outside the country to this very, very important webinar on Code of Ethics, common non-compliance by small and medium practitioners. And we are having our honorable Vice Chairman, Mangesh Kendare sir, from the financial capital of the country, Mumbai, our very, very prominent Central Council member. Very, very good round of applause to Mangesh sir. We are having our very, very prominent resource person who has authored hundreds of books and has contributed like anything for the cause of the profession, for the cause of the members, as well as for the cause of the students. CA Kamal Galji, who is going to take very, very important topic for all of us, common non-compliance by small and medium practitioners. We are having Mangesh sir, who has been the chairman of this very, very important ethical standard board, and he is the chairman of the PDC also. So with the support of Mangesh sir and the resources like CA Kamal Galji, I think we will be really doing something very, very concrete in this particular year for the cause of the profession and more particularly for the cause of the members. We are having our very, very prominent chairman of Ghaziabad branch, CA Dr. Nabindu Garji, our event enabler. We are having CA Manish Agrawalji, immediate past chairman of Ghaziabad branch. We are having the presence of CA Dr. Abhay Kansalji, our honorable secretary of Ghaziabad branch. And of course, we are having Ashish Group Bhatnagarji, our honorable secretary of this ethical standard board. He is a law graduate and masters of law and is contributing in a great way. We are having Mr. Madan, Vishal Madan, and others, Kanikaji, I think. And we are having very prominent workforce of the professional, the company secretaries, chartered accountants, as well as the law graduates and master of laws to support us in the endeavor, in which this year we are very I will say a vision and mission to see that how we can really do something very concrete. We can help out our members in a great way with the help and support of all our honorable dignitaries present here. And CA Kamal Gargji is one such personality who is really doing his best to see that how we can really do something very concrete. We are having this very important topic, code of ethics, common non-compliance by small and medium practitioners. We are having the vision this year that how we can help out the members through the ethical standard board, whatever artificial restrictions are there, how we can come out of those artificial restrictions, and we can make the life of the chartered accountants very easy. So I welcome once again all our honorable members who are present with us from each and every part of the country and outside country also. And friends, we are very well aware that code of ethics is a guiding force to the members of the profession, whether one is in practice or whether one is in employment. It is not so that code of ethics is meant only for the members who are in practice. And we are very well aware that this existing edition of Code of Ethics, 12th edition, was made applicable from 1st July 2020, with the exception of certain provisions pertaining to non-compliance with laws and regulations, fees, relative size, and taxation services of volume 1st of Code of Ethics. And these provisions have been made applicable with effect from 1st of October 2022. With certain amendments and are available on Institute's website. So we are trying to see that how we can update the Code of Ethics at the earliest. This is the first edition of the Code of Ethics to be segregated into 3 volumes. In volume 1, we are of course having the Code of Ethics converged with ISBA Code of Ethics 2018. And volume 2nd of the 12th edition is based on domestic provisions governing the chartered accountants, and of course we are having volume 3, the case law referencer. We are trying with the help of with the support of Mangesh sir, that how we can put the council decisions also in the Code of Ethics, and these case law referencer we can have the separate publication. So as a step towards protecting the dignity and interest of members, Ethical Standard Board has developed CA Connect portal. This is a very ambitious project of us. Mangesh sir is helping us like anything. President is having the target. We are having the target that how we can connect each and every chartered accountant, whether one is in practice, whether one is in employment, how each and everyone can be at the CA Connect portal. And this is one can access the CA Connect portal, caconnect.ici.org. One can register. We are trying to see that at our end also, Mangesh ji, we can get each and everyone registered with the help of the SSP portal, and then we will be sending the communication to each and everyone through electronic mail. And if they want to update, they can very well update according to their convenience. And friends, you must be aware, but at the cost of the repetition, I will tell you that CA Connect portal is a system of listing of chartered accountant firms, individual CA practitioners on the platform of ICI, and we will certainly see that how the chartered accountants who are in employment can also be there on the CA Connect portal. I will request the secretary of the ESB to take note of that we want each and every chartered accountant, whether one is in India, whether one is outside India, whether one is in practice, whether one is in employment, or whether one is Kumar Mangalam Birla, who is in the owner of a very, very prominent industrial group, should be there on the CA Connect portal. And this CA Connect portal is a very, very effective platform for listing due to limitation on such listing through online aggregators. Of course, we are having some restrictions, and due to that reason, we ourselves has come forward to see that how we can help out our honorable members. It is an innovative platform which will help professionals to foster growth, capabilities to prospective clients, and enhance their digital presence. It is an initiative for providing visibility to CA firms. The portal provides the essential bridge between clients, service providers, and chartered accountants and help them to connect. And friends, it provides an authentic listing of CA and CA firms at the platform of ICI. And of course, when the platform is provided by the Ethical Standard Board, there is no question of any unethical things or any ethical issues. And ICI will work as a facilitator and enable search to the users based on the data information submitted by the registered user. So if one want to know the GST experts in the city of Pune, in Pimpri Chinchwad, or at Mangeshar's place. So one will put number one Mangesh Kendreji, who is the GST expert in that particular area, and followed by other GST practitioner who may be having less experience. And let me tell you, you need not to put the name. You need not to put CA before Mangesh Kendre. If you will be putting Mangesh Kendre, sir. From each and every part of the world, maybe there may be hundreds of Mangesh, but only we will see that only and only first the name of the Mangesh Kendre sir, who is a chartered accountant in practice, should be there on the search engine. And friends, the portal shall be in addition to and not substitution of already permitted platforms. We are already permitted firm's website, listing on directory, online consultancy on third-party platforms. So it is in addition to those permitted platforms, and it is not the substitute of those permitted platforms. And these existing modes of listing will be continue to operate. What would be the advantage of the CA Connect portal? Prospective clients, service seekers can conveniently search chartered accountants for desired assignments, because now no one will come to you seeing the board. One may be having their one's office at their residence also, because everything is the service is provided online and virtually only. So I think that can be a very, very good platform. Then it will ensure confidentiality and privacy of client information, and level playing ground for practicing chartered accountants will be provided through this platform, and mitigation of chances of frauds, I think it would be minimized. And what are the features of the CA Connect portal? User-friendly interface, navigate effortlessly through an intuitive interface designed to enhance productivity and ease of use, and various criteria of search are there. And you can have the city-wise search, location of the CA office can be searched, service-wise search can be there, nature of services offered by CA, like that. And every member holding certificate of practice at present can enroll, and firm of chartered accountants can enroll. I will request Mangesh sir that whether we can have the chartered accountants who are not in practice also on the CA Connect portal, because they are supposed to be connected, because their services may be required by the end users, by the industries. If one want to change the job, or if one is a youngster one, through CA Connect portal, whether we can help out. And then at present, members not holding certificate of practice and networks and companies registered with ICI for corporate form of practice cannot enroll, but how we can try to see that these can also be the part of this CA Connect in the times to come. I think that is very, very important. And it is very, very easy to register on the CA Connect portal. we have to click on the register tab, register as professional. We have to enter the requisite details, enter OTP, set password. Profile can now be updated, and additional fields can be entered like that. And for clients, to fetch the details such as mobile number and email ID of the members' firms can be fetched by the clients. They can click on register tab. They can also be registered and they can register as guest user, enter the requisite detail, and then an OTP will come. Then they will enter the OTP and set a password, and account will get created for the prospective clients. So on the CA Connect portal, I as a practicing chartered accountant will also enroll, and as a client to get the services of the chartered accountants, I can registered as guest user. And I'm quite confident that all of us will certainly see that how we can use this very important CA Connect, which will be very helpful to the members who are in practice. And we are trying to see that each and every practicing chartered accountant can be on the CA Connect portal at the earliest. We are having, of course, the presence of our very prominent resource person, CA Kamal Gargji, who is a reservoir of the knowledge, and is helping out the small and medium practitioners. And through this ethical standard board, it is our endeavor at how we can really help out the small and medium practitioners, because the big entities, of course, they do have the sufficient knowledge as far as the code of ethics is concerned, but there are common non-compliances which due to inadequate knowledge our small and medium practitioners at times incurs. So I will request CA Kamal Garg sir to please see that how our small and medium practitioners can have that knowledge, so that those routine common non-compliances can be avoided. So I once again welcome our honorable guest speaker, CA Kamal Gargji. I welcome our honorable Vice Chairman, WISC Chairman, Mangesh Kendre sir. I also welcome our team of the Ghaziabad branch of the Institute of Chartered Accountants, C. Dr. Navindu Gargji, our honorable Chairman, and Abhay Kansalji, Secretary, Ghaziabad branch, and our team of the Ethical Standard Board. I will request CA Kamal Garg sir, who is a very prominent resource person, to take over, and I'm quite confident that his delegation will be very useful for the membership at large. A very big round of applause to CA Kamal Garg. Over to CA Kamal Garg.
Good morning to all of you. Thank you, Anuj, the chairperson of ESB, for giving me this opportunity. I'm also thankful to Mangesh ji to give the opening remarks, and I'm also thankful to all the dignitaries I can see on the panel. So the responsibility given to me is quite onerous, and I must say, when the topic is code of ethics, we have to see two words separately. One is the code and second is the ethics. I must endorse the words given by Mangesh ji that when we read code of ethics, there are two sets. One is the principle and second is the law. And sometimes there is a kind of a dilemma whether I should go by the law or whether I should go by the principle. As far as the topic given to me is concerned, it is much more confined to small and medium practitioners. But before I proceed ahead, I must say one thing out of my experience. Most of the chartered accountants, in my view, are having so much of DNA towards taxation, towards audit, that in a way we are getting oblivion of what the ethics is saying. As on date, when we say code of ethics, we need to segmentize code of ethics as per the publications of ICI, which Dr. Anuj ji was also referring. We have Code of Ethics Volume 1, we have Code of Ethics Volume 2, and we have Code of Ethics Volume 3. They respectively are dealing with some principles, then the Chartered Accountants Act, and the case law referencer. Before I proceed with my PPT sharing, I need to ask you some questions, and I would be requesting the office if somebody can answer. I don't know whether somebody can answer or not, and pass on the answers. So quite prominent questions are, when we say Code of Ethics Volume 1, which is principle-based scenarios, how many of us are aware whether there are any amendments or changes or requirements to inform Ethical Standards Board about the fees we are receiving from the clients? That is the relative size of the fees. So we'll discuss relative size of the fees with some numerical problems also. Second thing is, it is a quite prominent practice that at times the chartered accountants are depositing tax for their clients. Now the question arises, if a chartered accountant who's into practice is depositing tax for his client, whether it will lead to any kind of ethical issue. We'll discuss this thing also. Third thing is about management consultancy. So we are aware, as per section 144 of Companies Act, there are certain services which are not allowed to be rendered when you are in a position of an auditor. But the question arises, what the Code of Ethics is telling about management consultancy services. So we'll discuss all these things. Second segment of my discussion will be in relation to Council Guidelines 2020. I should say 2020, reason being, originally they were issued in 2008, and of late they were amended in February 2020. So we will discuss Code of Ethics Council Guidelines 2020. In these guidelines, I will be touching upon a very prominent factor. The prominent factor will be ceiling on number of statutory audits. Out of my experience, what I felt that most of the chartered accountants who are into practice, they are of the view that we can undertake 20 statutory audits and infinite number of certain companies audits which are exempted. It is not so. For that purpose, we need to refer to Council Guidelines which were amended in February 2020. We will also discuss one issue about if you are the auditor of a PSU or a listed company or a public company whose turnover is more than 50 crore rupees, and you are the auditor of that company. In such a case, can you charge audit fees which is lesser than the fees for other services? So we'll discuss this guideline also. We'll discuss one more guideline about undisputed audit fees, and then the session will propel further. At the end of the session, I would request the office to ask me the questions if the audience have given them any questions or any questions from your own forefront. So with these opening remarks as icebreaking, I am sharing my screen. Please confirm me once my screen is visible.
No, sir, not. Yes, sir.
Just, is it visible? Ashish, the screen is visible to you?
Yeah, it is visible, sir.
Okay. So I will start with Code of Ethics, the topic given to me for common non-compliances by small and medium practitioners. And as I was telling that we have Code of Ethics in 3 volumes, Code of Ethics Volume 1, Code of Ethics Volume 2, and Code of Ethics Volume 3. When I come to the new Code of Ethics, which was made effective from 1st April 2020, wherein certain provisions were deferred also, let me give you a brief synopsis of what Code of Ethics Volume 1 is all about. So Code of Ethics Volume 1 is based upon 2018 edition of the Code of Ethics, which was issued by International Ethics Standards Board for Accountants. And in this very edition of 2018, which was given by IESBA, the emphasis is that if the threats cannot be addressed, threats means the threats to independence. If the threats cannot be addressed, the professional accountant must decline or end the specific professional activity. The revised edition of this code has been made compatible with Indian conditions so that it does not contradict with Indian domestic law. And what is the main highlight of this revised code is the provisions have been amended by keeping the provisions of Companies Act 2013 in mind. Just see this structure of the revised code carefully. The revised code is having total 4 parts and one glossary towards the end. Part 1 is applicable to all the members. It consists of the code, fundamental principles, and conceptual framework. Part 2 is applicable to professional accountants or the chartered accountants who are in service. And it's also set out certain additional material that applies to professional accountants in service when performing professional activities. In Part 2, there are many principles, but the highlight of Part 2 is NOCLAR, NOCLAR, which stands for Non-Compliance of Laws and Regulations. So although this is not the topic of this session, but yes, I am giving a reference. Whenever time permits you, please refer NOCLAR provisions if any of the member is in practice. Part 3 is professional accountants in public practice, and it sets out additional material that applies to professional accountants in public practice when providing professional service. We do have Section 360, Section 360 of Part 3, which again deals with NOCLAR, but this NOCLAR is meant for members in practice who are carrying out the audit of certain class of listed companies. Part 4 is independent standards, and our focus today will be on Part 4, relative audit size, audit fee size. And then is the glossary, which contains certain definition of the terms. Having said that, let us start with fees. Section 410 of Part 4. So this Part 4 is dealing with independent standards. In this Part 4, we have Section 410, which deals with the aspect of fees. Now, what this scenario is all about, Section 410 fees is having two subtopics for the today's session. One is relative size of these fees. Now, be very careful what is coming up. Section 410 says that when the total fees generated from an, see this word an. This word an is a very important word. That means single audit client. When the total fees generated from an audit client by the firm expressing the audit opinion. So let us stop here. What is the feature coming up? There must be a single client, number one. Number second, you are generating the fees from that audit client. And what are the functions you are rendering for that audit client? Audit function. That's why the words are expressing the audit opinion. And such fees represents a large proportion. Now, what is the large proportion is given by the Code of Ethics itself. 40%, 20% rule. I will show you that rule in a while. Represent a large proportion of total fees of that firm. The dependence on that client and concern about losing the client create self-interest or intimidation threat. So what the theme is all about? The theme is all about like that. If I am earning say rupees 100. If I am earning say rupees 100 of my total firm revenue, rupees 100 is my total revenue, and let us assume rupees 60 is coming from one audit client. It means that I am having a kind of dependency on one single client. And I always may be under a pressure that I should not issue a qualified or a disclaimer or adverse report for such a client, because I may be having a fear factor that if I will issue, say for instance, the qualified report, the client may not be happy and I may be under a kind of threat. In such a case, the independence is getting impaired. Keeping that theme in mind, this provision is there in Code of Ethics Volume 1, Section 410. I reiterate this provision. When the total fees generated from an, I emphasize the word an again, from an audit client by a firm expressing the audit opinion represent a large proportion of total fees of that firm, the dependence on that client and concern about losing the client creates self-interest or intimidation threat. Now, as our Vice Chairperson Mangeshji was telling, that people believe that this Code of Ethics moves in negative way. And it is not like that. The positive scenarios are also there. Now, if this is the case that your independence is getting impacted or may be impacted, certain safeguards are also provided by the Code of Ethics. In this very event, where the large proportion of fees is from one audit client, the positive side is the Code of Ethics itself has given the safeguards. So what the ethic says in Section 410, actions that might be safeguards to address such self-interest or intimidation threat includes, I repeat, safeguards. So safeguard means a kind of positive sense. Safeguards to address such a self-interest or intimidation threat include, number one, increasing the client base of the partner or the office to reduce dependence on the audit client. So either increase the number of clients, or number second, having an appropriate reviewer who did not take part in the audit engagement review the work performed. Now, this is something very good point. Having an appropriate reviewer who did not take part in audit engagement review the work performed. Let us take an instance. I have a total revenue of rupees 100 from all the clients put together. And let us take a situation like that. From the audit of ABC Limited, I am earning 60 rupees. So that means I am largely dependent upon the statutory audit of ABC Limited. Someone may say that, Kamal, your independence may be impacted for statutory audit of ABC Limited. So what I can do? Either I can increase my client base so that this large proportion may be diluted. Or number second, I may engage an appropriate reviewer. Who is this reviewer? This reviewer must be a CN practice. This is must. And number second, this reviewer must not be involved with me in the statutory audit of ABC Limited. Now, what will happen? This reviewer will come in and he will review the statutory audit work performed by me. And then he will give you his findings and observations in the review report there. Yes, despite this large proportion of fees being involved, the independence of Kamal as statutory auditor was totally intact. So if this kind of situation can be there, the Code of Ethics will be deemed as complied with. Now the question arises, what is the sense of large proportion? How it should be interpreted, how this should be understood. For this very purpose, on 29 September 2022, certain amendments were made and a concept of differentiated disclosures came into picture. Let's see this amendment. This amendment was made effective from 1st October 2022, and ICAI made this announcement on 29 September 2022. But the announcement stated that the firms need to comply with from 1st October 22. The announcement stated that you have to bifurcate your clients, that is the audit clients, you have to bifurcate your clients into two categories: statutory audit of non-public interest entities and statutory audit of public interest entities. Now, what is public interest entity? We will see in a while. For the time being, you can simply say that public interest entity means a public company. Although a private company can also be a public interest entity, but how, we will see in a while. For the time being, what the institute says in Code of Ethics Volume 1 for the provision about relative audit size fees, disclosure is required. Disclosure is required where for 2 consecutive years, the gross annual professional fees from an audit client represent more than 40% of total fees of the firm. I read this sentence once again. Institute says in section 410, disclosure is required where for 2 consecutive years, the gross annual professional fees from an audit client represent more than 40% of total fees of the firm. So what you need to understand, the words are total fees here, which in my example was rupees 100. And if the professional fees from an audit client represents more than 40% of total fees, in my example, I got 60 rupees. So 60 rupees of audit fees out of total revenue of my firm is far, far beyond than 40%. So what I will be doing, I will be making certain disclosures. But where we need to disclose, let us keep this thing deferred. I will come to it in a while. Similarly, the percentage for public interest entity is also given, which is a lower percentage. But the percentage is there for public interest entities, 20%. So let us read this block also. Disclosure is required, to whom we will see in a while. Disclosure is required where for 2 consecutive years, the gross annual professional fees from an audit client represent more than 20% of total fees of the firm. So meaning thereby, let us take a situation just to have the understanding. If I have the audit of ABC Private Limited, I emphasize the word Private Limited. So what is the nature of ABC Private Limited? Non-public interest entity. If my total revenue is rupees 100 and my audit fees from ABC Private Limited is say rupees 30, then no disclosure is required. To whom we will see in a while. On the other hand, if I am the auditor of ABC Private Limited, my total revenue is rupees 100 and the fees from ABC Private Limited is rupees 40. Again, no disclosure is required because the words used are more than. Case number 3. I am the statutory auditor of ABC Private Limited. My total revenue is rupees 100. And say, for instance, I am having the audit fees from ABC Private Limited rupees 41, which is more than 40%. Disclosure is required. For the sake of this example, I am not considering the involvement of 2 consecutive years. Now, same way, let us take the situation for public interest entity. Let us assume my total revenue is rupees 100 and I am the statutory auditor of XYZ Limited. Now, XYZ Limited is a public interest entity. Now, let us take a situation. I am having audit fees from XYZ Limited, say rupees 30. In that very case, because it is more than 20%, I need to disclose this information to someone, to whom I will come in a while. Situation number 2. I am the statutory auditor of XYZ Limited. Total revenue is rupees 100. And let us take a situation. My audit fees from XYZ Limited. My audit fees from XYZ Limited is only rupees 5, which is less than 20%. So no disclosure is required. And in the third situation, my total revenue is rupees 100 my statutory audit fees from XYZ Limited is exactly rupees 20. No disclosure is required because it is the word written as more than. Now, having discussed this thing, a question arises: to whom this disclosure is required? To whom this disclosure is required? So, what we need to understand, this disclosure is required to ICAI, Ethical Standard Board. So, you have to send one email to Ethical Standard Board, and for this purpose, announcement was also made. Let me show you that announcement. Just a moment. Just give me a moment. I'm showing the page where you have to go to download the form. So what you have to do is you have to go to the website ici.org. And once you will go to the website ici.org, what you have to do, you have to go to the committees, then non-standing committees. And then you will go to Ethical Standards Board. Let me search here. This is Ethical Standards Board. And then you will see on the extreme right, just see here, reporting requirements pertaining to fees related disclosure to institute under the revised requirements of Code of Ethics. You will click it and you will get this announcement and the form. So just see this format is there. You will use this format and certain information is sought by you. So information is being given here in various columns and rows. And once this form is filled up, you have to send this form to ESB. The email ID is given on the top. Just see here. So you have to send this form duly signed by you in your capacity as a proprietor or a partner, as the case may be, to Ethical Standard Board, and the email is esb@ici.in. So this way, what will happen? The compliance of that fees aspect will take place. Now, I'm coming back to my PPT. Let us have some further discussions. Now, this is what the prime law is. It is also having some exceptions. Post amendment, which is effective from 1st October 2022, the exceptions were also amended. So just see what is the exception. Exception number 1. It is stated that no such ceiling on total fees of the firm, would be applicable where such fees does not exceed rupees 20 lakhs. Earlier it was 5 lakhs. So from 1st October 2022, it is 20 lakhs in respect of a firm, including fees received by the firm for other services rendered through the medium of a different firm or firms in which such member or firm may be partner proprietor. So if the total revenue of the firm, including other fees, is up to rupees 20 lakhs, then no disclosure is required to be made to ESB. Number second exception is no such ceiling on total fees of a firm would be applicable in case of audit of government companies, public undertakings, nationalized banks, public financial institutions, regulators. So this word regulators was added. Earlier, prior to amendment, the word regulators were not there. Now the word regulators is also added, or where appointments of auditors are made by the government. So for example, if you are having the statutory audit of a PSU and the fees received from that PSU is more than, say, 20% out of the total revenue, then no disclosure is needed to be made to ESB because of this exception number 2. So if I highlight the amendments, amendment number 1 is earlier this 40%, 20%, and 15%. Now it is 40% and 20% respectively for non-public interest entities and public interest entities. The other amendment is earlier the amount of exemption was for 5 lakhs. Now it is for 20 lakhs. That is total revenue. If it is up to 20 lakhs, then no disclosure is required to be made to ESB. And the third amendment primarily is that the statutory audit of regulator is also exempted to be reported to ESB. Having discussed all this scenario, now let us discuss what is the meaning of public interest entity. When I began, I said, let us, for the sake of inception, assume that only public companies are public interest entity. It is not so. Even a private company can become public interest entity. So whatever views I will be giving now, these are my personal views. These views may not be the views of Ethical Standards Board, but yes, to make the macro understanding, I believe this could be a beginning. So how the glossary of Code of Ethics Volume 1 defines public interest entity. So it says that public interest entity means an listed entity or an entity defined by a regulation or legislation as a public interest entity, or for which the audit is required by the regulation or legislation to be conducted in compliance with same independence requirements that apply to the audit of listed entities. Such regulation might be promulgated by any relevant regulator, including an audit regulator. So this may include the subsidiaries of listed entities also. For the purpose of this definition, it may be noted that banks and insurance companies are to be considered as public interest entities. Now, if you read very minutely, the words are banks and insurance companies, but non-banking financial corporation is not used. Now, the question arises whether non-banking financial corporation will be considered as public interest entity or not. For this purpose, we need to move ahead. And the definition further says other entities might also be considered by the firms to be public interest entities as set out in para number 400.8. Now, para number 400.8 give the factors to be considered to classify an entity as public interest entity. So your client may become public interest entity in your professional judgment by keeping in the factors like nature of business, size of business, number of employees, etc. To give you a few instances, it's my personal view. To give you a few instances, considering the nature and size of business, my view is even a non-banking financial corporation should be considered as public interest entity, number one. Number second, for instance, if a private limited company is in real estate and is receiving money from home buyers, the nature of business appears to be that public interest is involved. And in my view, a private limited entity which is engaged in real estate sector and is receiving money from home buyers should also be considered as public interest entity. Let me give a disclaimer again. These are my personal views. Maybe ESB could have a different version. Now, keeping all these theoretical things in mind, let us come to some questions. So this is case study number 1. The revenue side of P&L of CAX in practice shows as follows. Fees from audit services of XYZ Private Limited, rupees 3 lakhs. Fees from bulk returns, that is ITR, of employees of ABC Limited, 2 lakhs. Fees from preparing project report for a startup, 2 lakhs. Fees from providing FEMA advisory services to an IT company, rupees 1 lakh. Total revenue is 8 lakhs. But the question arises whether any intimation is required to be given to ICI for large proportion of fees. First of all, let us analyze this all one by one. Whether there is any statutory audit being carried out by CAX? Answer is yes. The CAX is carrying out statutory audit of a client, namely XYZ Private Limited. Whether in this question, this statutory audit pertains to only one client or more than one client, it is only one client, that is XYZ Private Limited. The other question will be whether XYZ Private Limited, the auditee, whether XYZ Private Limited, the auditee, is a public interest entity or a non-public interest entity. Because it is a private limited company and other things are not given in the question, I presume it is a non-public interest entity. Now, what is the proportion of fees? If we divide 3 lakhs divided by total revenue of 8 lakhs, the proportion is 37.5%, which is lesser than 40%. So someone may say that because the proportion is less than 40%, information need not be given to ESB. But we need to understand, even this proportion need not be computed. Why? Because the amount is 8 lakhs, which is less than rupees 20 lakhs. So altogether, there is the absolute exemption, and in this very case, this CAX, which appears to be a small and medium practitioner, need not inform the relative audit size fees information to ESB. So there is no need to compute percentage because altogether this 8 lakhs is lesser than the absolute limit of 20 lakhs. Had this limit not been revised from 5 lakhs to 20 lakhs, then obviously the proportion was supposed to be computed. In this very question, I have not considered that 2 years formula because that is not a very big deal. We have to check and we will report accordingly. Now see this case study number 2. The case study number 2 is the revenue side of P&L of CA shows as follows. Fees from audit services of XYZ Private Limited, 6 lakhs. Fees from bulk returns of employees of ABC Limited, 1 lakh. Fees from preparing project report for a startup, 2 lakhs. Fees from providing FEMA advisory services to IT company, 1 lakh. Total is 10 lakhs. Now, again, this total is less than rupees 20 lakhs. So no reporting is required to be made to ESB despite the effect that the audit fees proportion of a single client is more than 40% because it is 60%. So despite the fact that the percentage is more than 40%, information need not be given to ESB because it is altogether into exempted category because the amount is not exceeding rupees 20 lakhs. If I show you again, amount does not exceed rupees 20 lakhs, then you are into exempted category. Now see case study number 3. Case study number 3 is the revenue side of P&L of CEX in practice shows as follows. Fees from audit services of XYZ Private Limited, 9,50,000. Fees from bulk returns, 750,000. Fees from preparing project report, 3 lakhs. Fees from providing FEMA advisory services to IT company, 2 lakhs. Total is 22 lakhs. Now it is quite apparent that CEX will not fall into exemption because the total fees is more than rupees 20 lakhs. Now we need to check whether he's carrying out any statutory audit or not. Answer is yes. He's carrying out the statutory audit of XYZ Private Limited, and from this single client, the fees is rupees 9,50,000. We need to calculate what is the proportion of 9,50,000 in total fees of rupees 22 lakhs. So this will be 43%. Now, because this is 43%, this 9,50,000 constitutes more than 40% of 22 lakhs. Being a non-public interest entity, when your proportion is more than 40%, what you will do? You have to inform to ESB as per the format I have shown you earlier on the website of ICAI, and this information need to be submitted by duly signing that form. Case study number 4. The revenue side of CEX in practice shows as follows. Fees from audit services of XYZ Private Limited, 8 lakhs. Fees from bulk returns, 750,000. Fees from preparing project report, 3 lakhs. Fees from providing FEMA services, 2 lakhs. Total is 20,50,000. Now what is happening here? Since the absolute amount is more than 20 lakhs, what is happening? The exemption is not available. Now we need to check whether it is a public interest entity or a non-public interest entity. It is a non-public interest entity because XYZ Private Limited is involved. Now we need to check whether the fees from this single audit client is exceeding 40% or not. 8 lakhs constitutes approximately 39% in total fees of 20,50,000. So in this very case, because the percentage is not exceeding 40%, no information is required to be reported to ESB. Now let us have a look out on case study number 5. The revenue side of P&L of CEX in practice shows as follows. Fees from audit services of XYZ Private Limited. Company is a real estate developer and has received money from home buyers, 8 lakhs. Fees from bulk ITR filing, 6 lakhs. Fees from preparing project report, 5 lakhs. Fees from providing FEMA services, 2 lakhs. Total revenue is 21 lakhs. Now, somebody may say XYZ Private Limited is a non-public interest entity. But in my personal view, it is not a non-public interest entity because as home buyers' money is involved, public interest is also involved. Because public interest is involved, in my view, XYZ Private Limited should be considered as a public interest entity. And when it is a public interest entity, what you will do? You will apply a lower threshold, that is 20%. Let's see here, 20%. Now, if I will apply this lower proportion 20% criteria, then what will happen? In this case study, 8 lakhs constitutes close to 38%, of total fees of 21 lakhs, which is more than 20%. And because it is more than 20%, we need to file the petition to ESB as per the prescribed form. Case study number 6. This case study number 6 is having one additional point, that is LR services. So LR stands for limited review services. Now, other things keeping as same as in the previous questions, total fees is 21,50,000, which is more than 20 lakhs. So absolute exemption is not available. Now here we have 3 clients towards audit. One is audit service of XYZ Private Limited. One is audit service of ABC Limited. One is LR services of RST Limited. So LR means limited review services I presume that RST Limited is a listed entity, and as per glossary given by Code of Ethics, audit includes review services also. Then we have FEMA services, 2,50,000. Now, question arises, here XYZ Private Limited is a non-public interest entity, ABC Limited is a public interest entity, and RST Limited is a public interest entity. So which information we need to give to ESB? So let us compute one by one. XYZ Private Limited, total fees is 8 lakhs. 8 lakhs divided by 21.5, this will be 37%. So because this percentage of 8 lakhs in 21,50,000 is only 37%, which is less than 40%, information need not be given to ESB. Then is ABC Limited. ABC Limited is a public interest entity. Being a public interest entity, the statutory proportion will be 20%. So let us compute 6 divided by 21.5. This will give you close to 28%. Because this 28% is more than 20%, when I will be filing information to ESB, I will give information about ABC Limited audit. Then is LR services. LR services means limited review services of RST Limited, which is being carried out by virtue of Regulation 33 of SEBI LODR. Fees is 5 lakhs. Now, if I compute the proportion, because RST Limited is a public interest entity, 20% proportion will be applicable. So 5 lakh divided by 21.5. This will give you, just a second, let me compute. 5 lakh divided by 21.5. This will be 23%. So 5 lakh constitutes close to 23% in 21,50,000, which is more than 20%. Information need to be submitted to ESB. So I believe all these questions must have given you a fair idea of what this amendment is all about regarding fees relative size. In all these questions, what I have not considered is that 2 years criteria, because that is quite easy to pursue. Next is fees overdue. Now, what the Code of Ethics says in section 4104, fees overdue. They say that a self-interest threat might be created if a significant part of fees. Now, what is significant part of fees is not given per se in the Code of Ethics, this very section. In my view, that significant part may be given a kind of analogy from what we discussed in the previous clip. If a significant part of fees is not paid before the audit report for the following year is issued, So, for example, if you are carrying out the statutory audit of financial year 2024, now before you issue the statutory audit report of 31st March 24, if the audit fees for 31st March 23 is not cleared, and I assume that this fees forms a significant part of fees, in such a case, you may be under self-interest threat. And ideally, you should decline the audit for 31st March 24. That is what the principle of this Code of Ethics is. But as I told earlier, and even our vice chairperson also emphasized this thing, this Code of Ethics is not moving in negative direction. Safeguards are also given. Now, what is safeguard? The Code of Ethics says here, actions that might be safeguards to address such a self-interest threat include obtaining partial payment of overdue fees, So it is not saying that you have to obtain 7% fees. You can obtain partial payment also. Or number second, having an appropriate reviewer who did not take part in the audit engagement review the work performed. This I already covered in previous clips. So by applying these safeguards, if the proportion of fees which is outstanding towards you is slightly cleared, you can undertake that audit, and it will be assumed that the self-interest threat is not there. The Code of Ethics further says, when a significant part of fees due from the audit client remains unpaid for a long time, the firm shall determine whether the overdue fees might be equivalent to a loan to the client and whether it is appropriate for the firm to be reappointed or continue the audit engagement. So there could be a situation like you are carrying out the statutory audit of 2024 and your fees is outstanding for last year also, immediately last to last year also, and so on. If this kind of scenario is there, you need to evaluate whether such a kind of outstanding amount is a kind of loan or a financial accommodation to the client. So in a way, are you financially accommodating the client by not getting the fees? If the answer is yes, obviously you have to make a call whether you have to continue with the client or discontinue with the client, because self-interest that is getting inculcated. So up till now, whatever I discussed was for audit fees. Now let us come to the next leg of discussion, management services and the auditors. We may recall that we do have section number 144, section number 144 of Companies Act, which says that if you're rendering certain services which are other than audit services, then you cannot be qualified as auditor. And on the same forefront, in a way, we can say that being a statutory auditor, we are not allowed to render certain management services to the client, non-audit services to the client. For this purpose, management services and auditors aspects are being dealt in para number 600 onwards of Code of Ethics Volume 1. So let me give you a brief snapshot of what this whole scenario is there. Section 404 says that providing tax services to an audit client might create a self-review or advocacy threat to the extent such services becomes an item of financial statement. A firm or a network firm shall not assume a management responsibility for audit client. Please keep these words in mind. A firm or network firm shall not assume a management responsibility for an audit client. It is further stated that providing a non-assurance service to an audit client creates self-review and self-interest threat if the firm or network firm assumes a management responsibility when performing service. Assuming a management responsibility also creates a familiarity threat and might create an advocacy threat because the firm or network firm becomes too closely aligned with the views and interests of the management. Too closely aligned with the views and interests of the management. Examples of the activities that would be considered as management responsibility include authorizing transactions. However, we need to make a distinction between management responsibility and administrative services. So what this section 602 says here, admin services involve assisting clients with their routine or mechanical tasks within the normal course of operations. Such services require little to no professional judgment and are clerical in nature. Hence, the conclusion is, number one conclusion, assisting clients with their tax reporting obligations, such as ITRs, by drafting and compiling information, including the amount of tax due, usually on standardized forms required to be submitted to the applicable tax authorities, does not usually, the word is usually, create threat. Number second, auditor cannot provide recommendations to audit clients on tax calculation of current and deferred tax liabilities. I emphasize, auditor cannot provide recommendations to the audit clients on tax calculation of current and deferred tax liability, but can review the same and advise appropriately. Now, having said that, I have a question. The question is, suppose that ABC Limited is your statutory audit client and it approaches you with a request, please deposit my self-assessment tax or advance tax and I will reimburse you later. Can you do so as a statutory auditor? To my personal understanding, the answer is no. Why the answer is no? Because it will lead to self-review threat. Why self-review threat? Because this transaction will take place and this transaction will be taken place with the help of your office and you will be reviewing your own work performed. And more importantly, depositing tax is a management responsibility and you shall not assume such a management responsibility. So in my personal view, if a CA firm which is acting as a statutory auditor of a client deposits tax for that very client, which will be reimbursed later, then it will result in a self-interest threat or a self-review threat, and it will be a contravention of Code of Ethics and may result in professional misconduct. More importantly, I can say this thing also in a different way. If you are paid the money by the client first, and then you are paying the self-assessment tax for the client, even this will be considered as assumption of a management responsibility. And in such a case also, the threat to independence may be created. Or because it cannot be called as an admin service. It cannot be called as an admin service. And for that very reason, what you need to understand, the word is usually. The word is usually. For that very purpose, be very careful in your professional judgment whether to undertake that work or not. It is also important to refer section 144 of the Companies Act here. Section 144 of the Companies Act says that you can render only those other services which are approved by the Board of Directors. So depositing tax is a service which was never approved by the Board of Directors. So if you render such a service, then it will be resulting in contravention of section 144 of Companies Act also. Now, this completes the prominent issues of Code of Ethics Volume 1 as far as principles were concerned. Now let me come to the next leg of discussion about council guidelines, ceiling on number of statutory audits. Now, what the provisions are for ceiling on number of statutory audits? Let us go to the background of this topic first of all. In Companies Act, we do have section number 141, subsection 3, clause G. Let me display on the screen. Section number 141, subsection 3, clause G of the Companies Act. What it says? It says that one auditor can carry out maximum 20 statutory audits. One auditor can carry out only 20 statutory audits. So what you need to understand, the interpretation of this clause number G, the interpretation of this clause number G to section number 141.3 is like that. I can undertake only 20 statutory audits. Other audits are totally not possible for me. Keeping this thing in mind, MCA came up with the notification in June 2015, and the notification stated that while you compute 20 in number, the following companies will be excluded to be counted. That is 1% company, dormant company, small company, and those private companies who are having paid up share capital of less than rupees 100 crores. Please be very careful with this symbol less than. So if it is exactly 100 crores or more than 100 crores, the company will not be exempted. So when this notification came up, then interpretations also got changed. The interpretations were that I can undertake 20 statutory audits, for instance, of public companies, and infinite number of audits of these exempted companies. So for example, if I take a look with this like this, I do have, for example, 20 statutory audits of public companies. Now, I was approached by 50 small companies, and they stated, Kamal, please carry out the statutory audit of these 50 companies. Can I carry out? Answer is yes, per se. Because small companies are exempted, so it appears that I can carry out 50 audits of small companies also. So this may lead to unfair distribution of work. This may lead to unfair distribution of work. If the interpretation is like that, you can carry out 20 statutory audits and infinite number of statutory audits of exempted companies. To overcome this kind of possibility, which may lead to unfair distribution of work, Council Guidelines 2008 were amended in February 2020, and the Chapter 8 of Council Guidelines states that one auditor can take maximum 30 statutory audits, in which the following are not included. So now the count will be 30 read with Companies Act, but in that very count 30, only two companies will be excluded, 1% company and dormant company. Only two class of companies are getting exempted, 1% company and dormant company. Meaning thereby, if we need to have a lookout, the lookout will be, I can have total 30 audits, putting all together, including small company and private company having paid up capital of less than rupees 100 crores. 1% company, dormant company, I can still carry out infinity. So meaning thereby, if I show you something by giving an example, say CAX is having 20 statutory audits of public companies plus private companies having having more than rupees 100 crores of capital, then he can undertake, say, only 10 more audits to include, as per his choice, any combination of small companies and private company having less than rupees 100 crores of capital. Let me make a small correction here. This is more than equal to. So this will be the interpretation. And more importantly, number third one be OPC and DC. DC means dormant company. OPC means 1% company. statutory audits are not counted in 30. So this is the thing which I believe a small and medium practitioner should be focused too much, because this law says 20, guideline given by council says totality is 30, wherein the exemption given to small company and private companies having paid up capital less than 100 crores are partially diluted to be in the whole limit or horizontal limit of 30 only. So I believe this must be clear to each one of you. That is ceiling on number of statutory audits. Now, other is about other council guidelines about undisputed audit fees. Now, council guidelines 2008 as amended in 2020 states that a CN practice shall be deemed guilty of professional misconduct if he accepts appointment as an auditor where undisputed audit fees for carrying out the statutory audit under Companies Act 2013 or various other statutes. So when I say various other statutes, it will include tax audit fees also. It will include GST audit fees also. Has not been paid by the entity to the previous auditor. So if you are the incoming auditor, one requirement is to have a written communication with the predecessor. The other requirement is to ensure that you have checked whether undisputed audit fees of the predecessor auditor is being paid by the company or not. And what audit fees I'm talking about? The audit fees which is undisputed. The question arises, what is the meaning of undisputed audit fees? For this purpose, see the fourth bullet point. It is being defined as the provision for audit fees in the accounts signed by both the auditee and the auditor, along with other expenses, if any, incurred by the auditor in connection with the audit, shall be considered as undisputed audit fees. So take an example. You have the balance sheet of ABC Limited, and in the current liability, ABC Limited is reflecting provision for audit fees payable. It is rupees say 10,000. You have signed the balance sheet, the client has also signed the balance sheet. So it will be presumed that this audit fees is undisputed. Now there is an exception also. Exception is audit of SIC unit. Now what is SIC unit? Unit registered for not less than 5 years, which has at the end of any financial year accumulated losses equal to or exceeding the net worth. So if the net worth is eroded, primarily this will be coming as a SIC unit. So if you're carrying out the audit of SIC unit and this SIC unit has not paid the statutory audit fees to the predecessor, then you can accept this appointment as an auditor subject to written communication with the predecessor. So please understand, this very guideline is nowhere exempting the incoming auditor to make written communication with the predecessor auditor before acceptance of appointment. The only exemption is for SIC unit, and that too for undisputed audit fees. That requirement of written communication with predecessor is not getting exempted from this guideline. Popularly, this written communication people call as NOC. In my view, the words NOC are not proper to be used, because when we see clause number 8, part 1, first schedule of Chartered Accountants Act, they are not saying that you have to obtain NOC from the predecessor. They simply say that you have to make a written communication with the predecessor before acceptance of appointment. So in this very clip, what is the major learning? Say for instance, you are the tax auditor of ABC Limited or maybe any partnership firm. You are the, let me type this question on the screen to make the thing simple. You are proposed to be appointed as tax auditor of ABC and Company, a partnership firm, for the financial year, say 2023-2024. You found that the balance sheet of FY 2022 to 2023 reflects a liability towards tax audit fee of CAY for CAY, predecessor tax auditor. Question is, can you accept this assignment? So first of all, it is quite apparent from this question that ABC and Company is a partnership firm, not a company. So the fact is, here we will apply the council guideline because the words used were various other statutes. So tax audit fees is also covered. Secondly, the fees is undisputed. Why the fees is undisputed? Because I'm presuming that CAY find the balance sheet of this partnership firm in the preceding year and the fees became undisputed for that matter. Now you cannot accept this assignment unless and until this partnership firm pays the undisputed audit fees to CAY. And I must give a precaution over here that you have to make a written communication with CAY prior to acceptance of this appointment. That's why I use the word you are proposed to be appointed. So if you want to exercise this proposal, two prime things you need to comply. Number one is you have to communicate in writing with the predecessor auditor CAY, and you need to check and ensure that undisputed fees of CAY must be paid by ABC and Company before you take up the audit assignment. Audit here means this tax audit assignment. Other guideline is appointment as an auditor while indebted. So the guideline says a member of ICI into practice shall be guilty of professional misconduct if, number one, he accepts appointment as an auditor under section 139 of the Companies Act, that is statutory auditor, when he is indebted to the company for more than rupees 5 lakhs. So please understand, if you refer section number 141(3) of Companies Act, a person is disqualified to be appointed as a statutory auditor if he owes to the company a sum of more than rupees 5 lakhs. So if you owe more than rupees 5 lakhs to the company, then not only are disqualified, but if you still accept the appointment as an auditor, there will be a professional misconduct also. Number second, if he accepts appointment as an auditor in other cases when indebted for more than rupees 1 lakh. So there could be a scenario like that. You are getting appointment as an auditor, say of any trust. And let us assume that the law relating to trust is not prescribing any threshold for indebtedness. So those laws in which you're carrying out the audit are silent about the liability amount that will make you disqualified. Then if limit is not specified by the law, then you will take the limit of rupees 1 lakh. So in this very case of my example, if you're going to be appointed as an auditor of a trust and the trust laws are silent about the liability amount, then the guideline says you will be deemed guilty of professional misconduct if you become auditor of the such trust in my example, if the amount of liability towards the trust is more than rupees 1 lakh. And number third, if other limits are given by some other statute, then they would be applicable. For instance, in Multi-State Cooperative Societies Act, it is stated that a person cannot be appointed as an auditor of a multi-state cooperative society if he owes to the society a sum of more than rupees 1,000. So if you are becoming auditor of a multi-state cooperative society and you owe to the society a sum of more than rupees 1,000, then not only will be disqualified, but you will also be guilty of professional misconduct. That is what the guideline says over here. The guideline further says internal auditor, concurrent auditor are not covered by this guideline. Further, in case of a firm, if one partner is ineligible, then whole firm is ineligible. So it may happen that in a partnership firm, we have 5 partners. Only one partner is having this liability. So what will happen? Not only that partner is ineligible, rather whole firm is ineligible. That liability, even by relative, also needs to be considered. So partner may not be liable, but his wife may be liable. In such a case, even this guideline is applicable. So this guideline is quite holistic to be covered. Then is the other guideline, remuneration for statutory audit and other work. First of all, what you need to understand, this guideline is applicable only when you are the statutory auditor of a PSU or a government company or a listed company or other public company having turnover of more than equal to 50 crores in a year. I reiterate, this guideline which we are going to discuss is applicable only and only when you are the statutory auditor of public sector undertaking or a government company or listed company or other public company having turnover of more than equal to rupees 50 crores in a year. Now, what is the guideline saying? If the fees for other work is more than the statutory audit fees from these clients, then there will be a guilt of professional misconduct. So for instance, Mr. X, a CA in practice, is the statutory auditor of PSU, and his stat audit fees is say rupees 100. Hypothetically, say rupees 100. And he has also given some permitted other services. He has also given some permitted other services to this PSU, and the fees from these other permitted services is say rupees 150. Now, what will happen, because 150 rupees of other work fees is more than the stat audit fees of rupees 100, Mr. X will be guilty of professional misconduct. Now, the guideline further says other work will not include the following. Now, primarily, other work is being defined by Section 2, Subsection 2, Clause 4 of Chartered Accountants Act, read with Regulation number 190, capital A of CA Regulations 1988. So, not going in detail to those sections and regulations, let us confine ourselves to here. This council guideline says that the other work for the purpose of this guideline, will not include the following other works. Number one, audit under any other statute. Number second, certification work done by statutory auditors. And number third, pre-presentation before an authority. For instance, if I come back to my previous clip, you are the statutory auditor of a PSU and your stat audit fees is say rupees 100. You're also the tax auditor. You are also the tax auditor of such PSU, and your tax audit fees say is rupees 105. Now, although tax audit fees is other work fees, which is more than rupees 105, but still there will be no professional misconduct because the guidelines say other work will not include audit under any other statute. So in my example, tax audit fees, although is more than the stat audit fees, still there is no professional misconduct because tax audit is not considered as other work for the purpose of this guideline. Now, what the guideline further says, this guideline is applicable in aggregate, meaning thereby you will need to consider collectively not only your firm, but your management consultancy company also, your associates also. For example, if I go back to the previous clip, there are two CA firms. One is ABC and Company, other is XYZ and Company. You are a partner in ABC and Company. You are a partner in XYZ and Company also. ABC and Company is the statutory auditor of PSU and is charging the stat audit fees of rupees 100. XYZ and Company is the tax auditor of this PSU and charging the fees of rupees 105. So now what will happen, because tax audit fees is more than rupees 100 of stat audit fees, these need to be compared. But still there is no professional misconduct because tax audit fees is not covered in other work. So what I am doing in this example, I am assessing the guideline collectively. So I will compare fees charged by my firm as well as the fees charged by my other firms in which I am a partner or in which I am a director as management consultancy company. Now let us have some illustration to understand. This is a pure hypothetical illustration just to make the concepts clear. So if you see block number 1, CX is a partner in Measures X, Y, Z and Company, a CA firm, and he is the auditor of ONGC. ONGC is the PSU over here. Second block is saying CX is also a partner in Measures DEF and Company, another CA firm. And what this firm did, GST training was provided to ONGC staff by Mr. D, a partner. So one other partner is there in DEF and Company along with Mr. X, and this CA firm, D and F Company, provided GST training to the staff of ONGC. Now the question arises whether there will be misconduct or not in respective cases. Case number 1, statutory fees charged by XYZ rupees 1 lakh, GST training fees charged by DEF 1,50,000. Is there a professional misconduct? Answer is yes, because GST training is not covered by excluded other work services. So because GST training fees, that is other work fees, is more than stat audit fees, and we have to assess this guideline on collective basis, there is a professional misconduct. Secondly, stat audit fees is 1,50,000, GST training fees is rupees 1 lakh. Both are before you. Now question is whether there is professional misconduct. Answer is no. There is no professional misconduct because stat audit fees is more than GST training fees, that is other work fees. Lastly, stat audit fees 1 lakh, GST training fees rupees 1 lakh. Question arises whether there is any kind of professional misconduct. Answer is no, because both fees are equal. Stat audit fees is not more than other work fees, and that's why there is no question of professional misconduct. So I believe these guidelines must be clear to each one of you. Now let me proceed further with certain decisions of ESB. So of late, ESB takes some decisions and issues some clarifications also. Recently, some decisions were taken by Ethical Standards Board, which I believe must be known to each one of the listeners as statutory auditors and members in practice as well. So what are these decisions? Let us move one by one. These decisions are also available on the website of Institute. So I am reading this decision, very simple decisions, but can have very big impacts. Number one, statutory auditor or tax auditor cannot act as valuer of unquoted shares of any company. Number second decision, member cannot be appointed as statutory auditor or tax auditor of such a company for a period of 2 years from the date of his resignation or removal as director from such company. So let us take a situation. Situation is like this. You were earlier in the industry, you were doing job in a company as a director. Now you decided that you should move into practice. So you resigned as a director of XYZ Limited and started your practice. Now the question arises, when you start your practice, can you undertake statutory audit or tax audit of XYZ Limited? Answer is no. Why? The answer is no for a reason. The decision of ESB says that there's a cooling off period of 2 years. So you have to wait for 2 years post your resignation or removal as a director of a company. And after these 2 years only, you can take the statutory audit or tax audit of that very company. Further, it is not permissible for a member to use messaging applications to send messages to make people aware about his practice and mention the services provided therein. Then, member in practice cannot act as trademark or patent attorney. However, professional advice in relation to intellectual property rights is a routine professional work for a chartered accountant in practice, and same is permissible. Out of these 4 pointers, I believe these first 2 pointers are extremely important because these may be the normal affairs of most of the CAs. Further, the more decisions, there is no prohibition for internal auditor of a company to acquire or purchase shares of said company. So being an internal auditor, you can be the shareholder of that company also. Further, our CA firm may register itself on Udyog Aadhaar, a web portal of Ministry of Micro, Small and Medium Enterprises. So you can obtain Udyog registration number also. A member in practice cannot hold customs broker license under Section 146 of Customs Act. Then a chartered accountant in service. Now be very careful, I am using the word service. So decision of ESB is a chartered accountant in service may appear as tax representative before tax authorities on behalf of his employer, but not on behalf of other employees of the employer. And it is quite logical also, because you are not into practice, you cannot represent other people, as it will result that you are into practice. So you can simply represent your employer and no one else. Then a CA or a CA firm can act as internal auditor of a company and statutory auditor of its employees' PF fund under the new Companies Act. Further decisions are, it is permissible for a member in practice to be a settler of trust. This is something important. A chartered accountant cannot exercise lien over the client documents or records for non-payment of his fees. So if a client has not paid your fees, you cannot keep the lien over his records and documents. This decision, in my view, is based upon a Supreme Court judgment in Balram Prasad Sharma versus R.D. Saxena, where Supreme Court also held that the lien cannot be exercised on the books and records because these books and records are not goods. Lien can be exercised only on goods. On the same forefront, I believe this decision also endorses the same decision by saying the chartered accountant cannot exercise lien over client documents or records for non-payment of fees. Further, a chartered accountant in practice is not permitted to accept audit assignment of a bank in case he has taken loan against fixed deposit held by him in that bank. Further, a chartered accountant in practice can act as mediator in court, since acting as mediator would be deemed to be covered within the meaning of arbitrator, which is inter alia permitted to members in practice as per Regulation 191 of Chartered Accountants Regulations 1988. Now be careful for this pointer. This pointer may be important for this particular period because bank audit season is going on. So what the decision here is, a chartered accountant can hold the credit card of a bank when he is also the auditor of the bank, provided that the outstanding balance on the said card does not exceed rupees 1 lakh beyond the prescribed credit period limit on credit card given to him. So the limit is 1 lakh. If it is more than that, then you cannot become the auditor of that bank. Further decisions, a chartered accountant in practice may engage himself as registration authority for obtaining digital signatures for clients. Then a chartered accountant in practice may be an equity research advisor. See the word advisor. So you can be equity research advisor, but you cannot publish detailed report as it would amount to other business or occupation. Then it is permissible for 2 or more chartered accountants in practice collectively to have a joint training session for their clients on GST and share the fees collected from the clients thereof. What is important here is you can provide GST training sessions to your clients only. Further, it is not allowed to print vision and values or members' photograph on the visiting card. So I have seen this practice a lot. If you are having a visiting card, on the visiting card, you cannot have your photograph, you cannot have your vision or values. And I must say also, this members' photograph, in my experience, I have seen a lot, is a kind of flouting of ESB decision, which is not allowed. Then it is not permissible for a chartered accountant in practice to mention the catchwords like quality, knowledge and transparency, integrity, etc. on websites, letterheads, or visiting cards. So more decisions. As a member in practice, cannot mention services such as filing of income tax return, GST return, audit, etc. on professional documents, visiting cards, letterheads, or signboards. So if you have a visiting card, I have seen some of the visiting cards. At the back of the visiting card, it is written our services. So this kind of categorization at the back of the visiting card or on the front face of the visiting card is not allowed. But it is permissible to mention services provided by the firm in signboard, which can be put up inside the premises of the firm. Just see the word inside. So you cannot put this signboard renting services outside your office premises. It is inside your premises. Further, use of glow signs or lights on large signboards as is used by traders or shopkeepers is not permissible. It is not permissible for a member to mention the name. This is a very important decision, and I have seen this is also flouted. It is not permissible for a member to mention the name of certificate course of ICAI cleared by him. However, where diploma is awarded by ICAI, the same can be mentioned on visiting cards, letterheads, or other stationery. If I share some of the experience which I experienced, and even you must have seen. So, for example, the chartered accountant CAX, he cleared FAFD course of ICAI. FAFD stands for Forensic Accounting and Forensic Detection Fraud Detection course. The FAFD is a certification course. If you have cleared the certification course, you cannot write after your name FAFD. Similarly, you must have cleared certification course in IFRS. You cannot write after your name CIFRS, that is Certified IFRS Professional. These names are not allowed because it is a certification course. If I take one more example, say you have cleared concurrent audit course of ICAI, the certificate course on concurrent audit. You cannot write CCA after your name. It is disallowed. But you have cleared DISA, is allowed, diploma course. DIRM, allowed, diploma course. So certification course designations cannot be placed before your name or after your name, as the case may be. Then further decision is, it is permissible to mention the name of the member or firm of chartered accountants for inclusion in television or movie credits. It must be taken care that exhibition of name is not made differently as compared to other entries in the credits. So you must have seen in a movie theater hall, when the movie begins or movie concludes, at the end it is written, or in the beginning it is written, our team. Then they will write sport boys, producer, directors. Then they may also write our chartered accountants. So a name can appear. But when this name appears, it must be the same context and texture. It may not be something different. Further decisions. A write-up may be written. So you may write articles for newspapers and magazines. But there is a condition. For example, write-up may contain information about an achievement or award given to a member, provided it has been awarded by central or state governments or regulatory bodies. So some women association. So some women association is there, or resident welfare association is there. So if resident welfare association gave you the best resident award, you cannot write in the magazine that you are also awarded as best resident by XYZ resident welfare association. This is not allowed. What you can write is only those achievements or award which are given by some government bodies. For example, ICAI gave you some award. You can mention that fact. Central government gave you some award. You can mention that fact. Further decisions. members in practice cannot list themselves with online application-based service provider aggregators. So like you have various aggregators, I cannot name on this platform, you cannot list themselves on those online application-based service providers. Then members in practice may upload videos of educational nature on the internet, but no reference should be made to the CA firm, wherein members are partner proprietor. Further, it should not contain any contact details or website address. So if you are making some educational videos, you can have your name on that video, but you cannot have the name of your firm on that very video. For example, if I say like this, a GST video was created by some speaker, a company law video was created by some speaker, and the name was appearing CAX in practice. To that extent, it is okay. But the very moment what is written, CAX partner XYZ company chartered accountant, this is not allowed. Number one. Number second, you uploaded a video or you conducted some seminar or a webinar, and what you did, you wrote CAX. Now below CAX or along with CAX, you're writing expert in bank audits, expert in GST. This kind of designation is also not allowed. And this is not only related to ESB decision. I must remind all of you that we have section number 7 of Chartered Accountants Act and clause number 7, part 1, first schedule of Chartered Accountants Act, which also disallows usage of wrong designations by the chartered accountants. Some of the CAs who are into service, they assume that because they are into service, this usage of wrong designation is not applicable to them. It is applicable to them also by virtue of section number 7 of Chartered Accountants Act. Number 4, this again is very important. You must have seen that of late, chartered accountants are being invited to various seminars and webinars, and they use their PPT as a matter of presentation. So what is the guideline saying about PPT? The guideline says, as a matter of decisions taken by ESB, only the name of the firm of chartered accountants may be mentioned on PPT made by the CEO of the firm. No other details. I emphasize, no other details whatsoever are permissible. For example, number 1, mention of the contact details or the members like mobile number are not permissible on the presentation made by him. The names of the other partners of CA firm cannot be mentioned in the presentation. So you can only mention your name, your firm name cannot appear, your mobile number cannot appear, your contact information can also not appear. Other partners in your firm cannot also appear as a name on the PPT. Further decisions. The use of logo or monogram of any kind, form, style, design, color, etc. is prohibited. Use or printing of member or firm name in any other manner tantamounting logo, monogram is also prohibited. You must have seen some CF firms to write their CF firm name in a special way. That is not permissible because it may result in a logo kind of element. So that usage of logo or monogram or special style, design, color is not permissible. Further, a member in practice is not allowed to be publisher of a book, whether or not authored by him. So you can be author of a book, you can be author of the book, but you cannot be publisher of the book. Further, member in practice are generally permitted to author books, which I also stated, and articles. There will be no issue in mentioning other chartered accountants' name with prefix CA in acknowledgement message of the books. Further, a member in practice needs to obtain specific permission from ICI to write script or story for a movie. Internal auditor cannot take GST audit simultaneously. Then a member or a firm can conduct training through seminars, etc. on GST. This I also covered in recent discussion. However, the member or firm may invite only its existing clients to such training programs. Inviting individuals or entities other than existing clients may amount to solicitation, which is prohibited. Further decisions. A member can share GST, tax, or legal updates, mentioning himself as CA with individual name, provided the communication is limited to providing updates. Mention of firm name is not allowed. So when you send WhatsApp or emails that these amendments have come up, and writing your firm name also, that is disallowed. Firm name cannot be mentioned, but you can mention as CA, for example, CAX, CAY, and so on. Then testimonials are allowed to be mentioned on CFM website, but not on social media like Facebook, LinkedIn, etc. Further, in terms of clause number 7, part 1, first schedule of Chartered Accountants Act, you are not allowed to share firm details intended for comparison of the firms. The sharing of such details would tacitly result in claiming superiority of one firm over other, which is prohibited in the law. So you cannot say that my firm is having rank 1 and other firm is having rank 3. This kind of comparison is not allowed. Then a member is not permitted to accept the appointment as statutory auditor of certain branches of the bank while he is a revenue auditor of different branches of same bank. Concurrent audit and assignment of limited review, tax audit, GST audit, etc. of the same entity cannot be undertaken simultaneously. So if you are the limited reviewer of a listed entity and you're also the concurrent auditor of the same listed entity, this is not permissible. If you are a limited reviewer of a bank and you also want to become concurrent auditor of the same bank, it is not allowed. Then there is no restriction for the consultancy work. There is no restriction for the consultancy work if it is undertaken by a member along with the assignment of internal audit. Then further decisions in a bank, the stock audit or inspection audit and statutory audit are not permissible to be done simultaneously. Since stock audit or inspection audit are a kind of management function which cannot be undertaken simultaneously along with the statutory audit, whether pertaining to same branch or concurrent auditor of a bank can accept revenue audit of the same bank since both audits are of the nature of management function. Then a member can simultaneously be the information system auditor and credit appraiser of the same bank, except in case your appointment as information system auditor has been made under a statutory or a regulatory requirement. This is something very positive. Chartered accountants in practice or firms of chartered accountants are permitted to register on GEM portal, Government e-Marketplace portal. The portal is before you, gem.gov.in, for rendering professional services. Further decisions. There is no bar for a member to go for ISO certification or other similar certifications. However, the member cannot use the expression like ISO certified on his professional documents, visiting cards, letterheads, or signboards, etc. So you can have ISO certification, but you cannot mention this fact on your official stationery website, etc. Printing of vision and values behind visiting cards may result in solicitation. I already covered. This is also covered earlier. It is not permissible for chartered accountants in practice to print their photograph on their visiting cards. So on your website, if you have a website, on your website, you can have a passport styled photograph. The difference is there between passport photograph and passport styled photograph. So on website, passport styled photograph is also permissible. But on website, no photograph of yours is permissible. And this guideline about visiting card photograph their own is applicable to members in practice. Lastly, from my side, KYC guidelines. These KYC guidelines were revised and were made effective from 1st January 2017. And I must say that these guidelines perhaps are not being complied with some of the chartered accountants in practice, maybe because of unawareness also. So what these guidelines say, first of all, these guidelines are mandatory in nature, and these are applicable only to members in practice. And these guidelines are applicable to members in practice only when they are rendering some attest function to a client. So what the law says here, following details about the client should be kept by the members in practice only in respect of their attest function. So if you have 10 clients, out of these 10 clients, 2 clients are your statutory audit client or internal audit client, or say for tax audit client. So here you have to maintain the KYC for these audit clients. Just see how. But you need to maintain client information, including general information, corporate structure, regulatory information like PAN, SIN, etc. Engagement information, that is type of attest function. So attest function here will include certificate also, like 15 CSCB. Then other information about the client, for example, financial information, details of auditor, of ultimate parent company, any non-violation of laws, etc. So these information need to be kept as a matter of KYC guidelines, which are notified and which were revised and notified again from 1st January 2017. So from my side, this is the whole prominent discussions on Code of Ethics, which are meant specifically keeping in mind the interest of small and medium enterprises as a matter of CA in practice. Should you have any questions, I would be happy to answer those questions. Ashish ji, any questions, sir?
Thank you so much, sir, for valuable insight. I would like to request here Bhai Consult Secretary Ghaziabad branch for the question and answer. For the question, sir.
Thank you, Rashi ma'am.
Answers be available.
Myself. Sir, I would be reading out the questions, and I request you to help me out with the answers.
Yes, please, Abhijit.
Yeah. The first question is, can practicing CA be a director and authorized signatory in a company?
So first of all, this question needs to be understood in two segments. First question is, can a practicing CA be a director? Let us first understand this thing. We do have clause number 11, part 1 of a schedule. Now, clause number 11, part 1 of a schedule says that a member of ICA and practice cannot engage into other occupations. But he can be a managing director or whole-time director only in his MCC, management consultancy company. Other than that, he cannot be. So, meaning thereby, if say Abhay Kansalji is a CN practice and he wishes to become managing director or whole-time director or any director in XYZ Limited, then for this purpose, he needs to have specific permission, number one. Number second, Abhay Kansalji is having his own management consultancy company, then he can become managing director or whole-time director in that management consultancy company. Number third segment is also important, independent director or director simpliciter. If you are an independent director or director simpliciter in any company, which is allowed by ICAI, then there is no problem in becoming director as such. Now, second question is signatory. For signature purpose, we need to go into section 21 of Companies Act 2013. As per section 21 of Companies Act 2013, certain documents, returns, etc. needs to be authenticated only by officers or employees of the company. Now, coming to the conclusion, in first case, where Abhay Kansalji was a director in any other company, and I assume that permission was taken from ICAI, then yes, he can sign those documents by virtue of section 21 of Companies Act. Number second, if he is a director in his own MCC, management consultancy company, which is permitted by ICAI, again he can sign. Number third, if he is independent director in any company which is permitted by ICAI, then also he can sign to the extent allowed by Companies Act. I believe the answer is clear.
Yes, sir. The second question is, can we work as a DSA for a finance company and earn commission?
So for this purpose, a guideline is there by ESB, and the guideline says at a macro level, there is no prohibition if you become direct selling agent. But the precaution, out of several precautions, the biggest precaution is while you become DSA, you are not allowed to market the products of the concerned finance company. So you can earn commission, but you cannot market the products. Now, when I say commission, we need to understand whether this commission is indirectly or directly resulting in marketing or not. So from this question, it appears that this commission primarily results in marketing function, which is not allowed. So you can be a DSA as an advisor, and as an advisor, you will be falling into management consultancy. But I must say also one thing: if you become a DSA, you cannot become the auditor of that company also.
Okay.
Am I clear, Abhijit?
Yeah. The next question is whether statutory audit can be taken up for a year in which legal advisory services were rendered for this by the same firm to the audit engagement.
Answer is no, it is not allowed because it will result in self-review threat. For this purpose, you need to refer para number 600 of Code of Ethics Volume 1 as well as Section 144 of Companies Act.
The next question is, can a CA in practice issue calendar to clients for due dates for various compliances?
Yes, he can, but the same thing which I discussed of late now, that you cannot mention the services rendered and all this stuff. The same thing also need to be complied for those calendars also.
Okay. Next is, in case of statutory branch audits, bank wants the acceptance to be given immediately and no time is given for the communication with the previous auditors. Can the acceptance be given clearly mentioning that the acceptance is subject to no objection?
It could be conditional acceptance. It could be conditional acceptance. That is also allowed. I would suggest whosoever has asked this question, you download Code of Ethics Volume 2 from ICAI website, download Code of Ethics Volume 2 and refer this clause number 8, part 1, first schedule. This issue is also dealt by the Code of Ethics Volume 2.
Okay. Whenever there is a change in a tax auditor, the previous CA may not come to know as to who has taken up the audit and where there is no communication at all from the new auditor. Can the ICAI have some mechanism to enable the previous chartered accountant to know the details of the new CA who has not followed the mandatory requirements?
So this question is not pertaining to code of ethics issue. This question is pertaining to administrative issue. I believe Ashish ji can answer this question, because whatever ICI will do, only IC people do know. So I
Okay.
believe that this question will be taken on record and maybe discussed internally with the
I
ICI.
guess Anuj sir or Mangesh sir would be dealing with this question.
Yeah.
Okay, the next is, what is the problem an auditor faces in case of non-obtaining of NOC from the earlier auditor, and how can the interest of the previous auditor be protected? Where can the previous auditor complain?
So there are 2-3 things over here. First thing is, if you are unjustifiably removed from auditorship, you can always write to ESB, and we have the guidelines for unjustified removal of auditors, and ESB can issue a kind of advisory or a warning to the incoming auditor for not undertaking the audit without clearing all the issues. Second thing is, if the incoming auditor does not accept the audit properly as per clause 8 part 1 for schedule, then on filing of the complaint, he may be guilty of professional misconduct also. So these are 2 things as proper safeguards.
Okay. Next is, can a COP holder provide management consultancy services under a separate proprietorship or partnership firm with non-professional?
Yes, for this purpose, I would suggest you have to refer 3 regulations. I am quoting regulation number 53A, regulation number 53B, and regulation number 53C. I repeat, regulation number 53 capital A, regulation 53 capital B, regulation 53 capital C of CA regulations 1988. So institute has now allowed to form multidisciplinary firms, and you can deep dive into details by referring these 3 regulations. So for this question, primarily answer is yes, but yes, again subject to the conditions given of 53A, B, and C.
Okay. What are the things a COP holder can or cannot mention on their LinkedIn profiles?
That I
The
already
second part of
covered
this
in my
question. Okay. Can he update non-audit services on LinkedIn? And if a COP holder is working as a consultant with any of these clients where he's not an auditor, can he update the same on LinkedIn?
See, as far as first question is concerned, to me, my understanding is the answer is yes, because it will be mutatis mutandis the formulation of the website guidelines. But the second question, the answer is no. Only you can give the partner's details, no other details.
Next question is, a thing which is not allowed to be done through private aggregators, how can become permissible if done by the regulator himself as per section 2122?
So this question, I believe, must be answered by Anuj or Mangesh. I would be not the right person to answer because it is still in progress.
Okay. Total fee means only audit fee, or does it include non-audit services as well?
It includes non-audit services also. So I covered 6 case studies. And if you try to recollect, in those case studies, other fees were also included.
Can a chartered accountant in practice do short-term and long-term investment in shares?
Yes, he can, but not as a trader, but as an investor.
Okay. Could an appropriate reviewer be an EQCR for an audit client?
Can be, because nature is same. So for that purpose, you may even refer SQC1 and SIT 220.
Regarding 20% or 40% of fees of total revenue from a single client, where disclosure is to be done in client's audit report or the financial statements, please guide.
I told you when I was discussing, and I showed you also, it is nowhere required to be shown in the notes to accounts or audit report. The disclosure is required to be made to ESB. So you have to go to the website of ICI.org, download the given format, fill this format, and mail to ESB. So disclosure
I'm
is
a proprietor.
Disclosure is to be made to ESB only. Yes, Abhijit.
Yeah, I'm a proprietor with total receipts of around 6 lakhs. Whether disclosure is required?
No, because total amount is below 20 lakhs, so the guideline exempts you.
Okay. Next is, suppose for 2 consecutive years, the fees from an audit client exceed the limit specified in the Code of Ethics, but in the 3rd year, the proportion is less than the limit. Does the disclosure needs to be made
Yes,
before
disclosure
taking
is
the audit for the 3rd year?
disclosure is required to be made. For this purpose, I would suggest, if time permits the queries, go to the website of IC.org, and certain FAQs have been issued for this purpose, and this query is also dealt in there.
Okay. Next is there any timeline within which the disclosure needs to be made to ICI? And
Primarily
is
for-
this applicable?
Yeah.
And is this applicable to tax audits as well?
Yes, it is applicable to tax audits also, and timeline is primarily before the signing of audit report. And as per FAQs given by ICI, they have mentioned 31st December.
Okay. When calculating 20% or 40% ceiling of fees, is it okay to keep PSU entity fees in the denominator of total fees?
PSU entities fees. No, you
I could not get.
You have to keep. I understood this question. Like, if you are the auditor of a PSU and you have some audits of other than PSUs also, whether we have to keep all the fees together, answer is yes. So we will include all the fees, PSU fees and non-PSU fees in denominator. But for numerator, you will exclude the PSU audit because PSU audit is excluded.
What is the definition of the small and medium practitioners? Any threshold limit based on the annual fees or number of clients?
See, there is no definition, there is no rule of thumb. It is only a customary practice that chartered accountants say, I am a small and medium practitioner. So keeping that thing in mind, whether you are small or medium practitioner or not, it will be totally your call, not the call of any regulator for that matter. So when we design this topic, small and medium practitioner, we keep in mind this customary practice where chartered accountants keep saying that I'm a small and medium practitioner.
Okay, just a couple of questions more. Can a member doing insolvency assignment take statutory audits?
Not of the same client, but the different clients.
Okay. If a firm has 3 partners, then how is the ceiling of 30 companies for each partner applied as per the Council Guidelines 20? Kindly explain.
3 multiplied by 30.
60.
So the 30 limit is for per partner. So you will have the multiplier effect.
Okay. The last question is the role being played by non-professional accountants in assisting the business community in professional account.
Abhijit, you are muted.
Is no less important than that of CAs. They are being more patronized in some cases as they are effectively able to meet the needs and demands of the clientele. My question is, does the institute have a plan to monitor or control their activities as well, just on the lines of the professional institutes in Africa and Europe?
So this answer should be given by institute only. I believe I'm not the right person to answer this question.
So this ends all the questions. Thank you so much, sir.
All pleasure, sir.
Over to you, Rashmi ma'am.
Thank you so much, sir. Now I would like to request Dr. Abhay Kansal, sir, for the vote of thanks.
Thank you, Rashmi ma'am. First of all, I would like to thank the Ethical Standard Board for organizing today's webinar. Most importantly, the chairman of ESB, C. Dr. Anuj Goyalji. Thank you so much, sir. The vice chairman, C. Mangesh P. Kinareji. Our today's learned speaker, C. Kamal Gargji. Thank you so much, sir, for giving us your valuable time. And most importantly, all the attendees, thank you so much for attending today's webinar. Thank you.